Good morning. This is Josh Hayes with Hedge Plus. I'm here with the weekly market monitor, Wednesday, October 1st. Change it up a little bit. Going to start doing this in our little studio as opposed to the regular format I've been doing in the past, twice a week. Doing a little bit more of a long form version, a little more in depth, and just going to be doing this once a week and just go a little deeper dive into the markets. We had yesterday's USDA report, its quarterly stocks report. A little bit of surprise there. Definitely more bearish data than people were expecting. They found nearly 200 million more bushels of corn than was expected, as comes at a time we were already facing harvest pressure and a massive crop, at least in terms of acres, and questions about where it's all going to go. Now we've added the idea that we've got more on hand than people were expecting, which just further compounds the situation. Taking a look at what we're weighing right now, there's not a whole lot of bullish um, data to talk about, but I will start there because we're going to go a little bit more in depth about what the report found yesterday. I am hearing that bean sizes, they're being reported smaller than normal in the Eastern Belt. That will lower yield from the current forecast eventually, but that's something that's going to take some time to catch up with the USDA most likely. We're also we should now experience another boost in sales. The sales have been already getting strong for both corn and wheat. Non-China sales have been strong for beans, but obviously it's a huge barrier to overcome if China's not buying. But soybean sales have kept up a little better than I think many would have expected, given the lack of purchases from China. Well, now, because of this post report downturn in prices we're seeing, and also harvest pressure, the downturn we will likely get from that, that's only going to increase more sales. So that's the kind of thing that it's a gift that we'll receive down the line. Again, I'm probably looking at a somewhat overrepeat of last year, where once these sales take place, because of our low prices, and we'll go deeper into prices a little later, it should help paint a better picture when the final numbers for the year are updated. But as far as the near term, what we have to deal with right now, we got 200 million more bushels of corn on hand than was expected. Add that to the pressure and the downturn we were already expecting from harvest. Harvest is rapidly advancing as we speak right now, and now you just add the new data to the fact that we were already wondering where all this new crop was going to go. And it turns out, at least according to the USDA, that we have more on hand right now. So that would have obviously mean more sales that are going to have to be made off the combine, which is only going to further add price pressure. Wheat market got really the double whammy of not only elevated stocks, but also an increase in projected production for 25-26. And this already came on the heels of raised production forecasts in places like Russia, in Australia, and even places like Argentina. So even though the numbers lately haven't been as bad as many were expecting for wheat, it just can't catch a break, the wheat market, and now we're right back to bearish projections and wondering if demand will be able to keep up with supply. Take a look at the weather. In the U.S., we continue warm and dry. This is obviously going to mean rapid harvest. Basically, everyone I talked to this week indicates that they are in the midst of harvest right now. The one spot that might get a little bit of rain is the northern plains, but aside from that, the harvest progress should be very rapid. Taking a look, the biggest story, I guess, in any elsewhere around the world that's not the U.S. or South America, India has been dealing with a lot of typhoons and cyclones. So their soybeans areas are becoming a little too wet. That's something to watch for. This time of year, I'm always going to be updating you on Brazil and Argentina. Starting with Argentina, right? They've had pretty optimal weather. They're drying right now until weekends, allowing for a lot of planting. But there is rain on the way, and they obviously want that rain, so that's a positive there. Whereas Brazil, the 10-day forecast is dry. It's becoming a little bit of concern. They're looking at, I believe it was around October 10th would be their next real good chance for rain. If they get that, that should keep them in a pretty good shape. But if we go, another 2-3 weeks or so with very little rain, they're going to have some issues there. Now I want to talk about international prices. This is something I definitely like keeping an eye on each week. On here, you can see that we have a very competitive corn price. Argentina is just a little bit lower than ours, and Argentina is just slightly higher than us with beans. Remember that export tax is back on. Our prices are only going to decline from here. So we should see continued strong corn sales. We should probably even see an uptick in bean sales. And with wheat, you're going to see us get a little bit more competitive there as well. The lowest price wheat is coming out of the Black Sea, Ukraine. Russia's prices have been a little bit on the rise lately. Baltic is starting to rise. We're obviously most likely, the next time we take a look at these prices next week, we will probably have come down. So we are going to see some benefit from this downturn. It should definitely give us a tick up in exports. Again, we've already had strong export pace so far for both corn and wheat, well above what the USDA was projecting. I think we'll see another uptick with beans as well. It won't be enough to offset the fact that China's not yet buying from us, but it might keep us close enough that when they do, things can shake out well in the end. Finally, take a look at overnight prices. Prices as of 5:10 this morning. Completely expected to see this when I got in this morning. Down across the board. Unfortunately, now we see soybeans with a 9 in front of them, down almost 5 cents from yesterday's close. Wheat down another 3.5 cents, and corn down another penny and a half. We're looking at prices that are down about a dime from this time last week with corn, down around near another 15 cents with beans, and down another near 20 cents with wheat. Unfortunately, don't think that we're be out of the woods just yet. We've still got harvest pressure. We're still probably on the underside of halfway through harvest. So we likely have a lot of crop that's going to be coming to the market yet that's going to further weigh on prices and add pressure. Hang in there. And there are some positives to it. Getting these numbers from USDA, if they are indeed accurate or not, what they're going to do is they're going to drive prices down. They're going to lead to more sales. And the more sales we make now, the better rally we'll have later on, either this year or early next year. That's all for this week. I hope everybody's harvest is going well. I hope everybody stays safe, and I will talk to you again next week.